Welcome, guys, to the watch list for the week of March 28th. So, last week in the watch list, we had discussed how it was going to be a crucial week. If the bulls were going to save face, they had to react at the 50-week moving average. Why is that? That's because last week is the first time the market moved from correction through time to correction through price. Now, if that doesn't make any sense to you, let's just show you the structure. You guys can see since late September, early October, the market had just moved sideways. All right. Overall structure, there was nothing that had changed. We were simply going sideways. Now, there might be a lot of bearishness, a lot of events, a lot of news coming out during this period, especially starting mid Jan. But at the same time, the bulls had showed up whenever they needed to. And yeah, we were just range bound. That changed since last Thursday. All right, so last Thursday and Friday is when price finally broke that consolidation to the downside. You guys can see Thursday is the first time we closed below that consolidation we had been in since Feb 3rd. And then on Friday we saw a sell-off. And then if bulls were to show up to make it a fake breakdown, they had to do it this week. All right, we held that 580 area last week. 580 to 576 was that support. The bulls tried to show up this week. You guys can see on Monday we had a gap up and then we consolidated for 2 days. If we were to have a follow through day for the bulls to charge, that was going to be on Thursday. And in Thursday's daily analysis, I had talked about how that NQ223 area was crucial. On Thursday, instead, we failed and we moved lower. Now, what does that mean? Well, the fact that we closed below the 50-week moving average is that we are out of this consolidation of 6 months. And that's no joke. That's something that has to be taken seriously. All right. Also, now we are in that territory where corrections happen. So you guys can see last time we went below the 50-week moving average, we saw a much bigger sell-off. The time before that was in 2022. We saw an extended bear market. Before that, COVID. Before that, in 2018. We saw a much bigger sell-off, and you guys get the picture. All right. Every single time below the 50-week moving average is where the risk piles up. Now, why was this situation different than last year? Last year, we moved quite fast after that sweep. We had moved quite fast to the 50-week moving average. This year, after the sweep in the end of Jan on FOMC, we moved slowly, taking our time. Given the fact that we already had a correction last year, the odds were, or this is how things usually play out, that this correction through time would allow us for another leg up. Obviously, that got complicated by Trump and the Iran situation and everything else associated with it. So we'll go more into the structure, but let's discuss why this situation got so much worse. The situation got so much worse because the Iran thing did not get resolved fast. So what that's leading to is an increase in inflation due to higher oil prices. That's also coming at a period where the unemployment rate is increasing. All right. So the increase in inflation means that the Fed can't really cut rates. It might actually have to raise rates. That increases the interest that the US has to pay on its debt, and the US debt was already quite high, which means that borrowing money for US is going to become more difficult. All right. They need to give more yield for it. So you have rising inflation. The Fed has to increase rates at a time when unemployment is also at a bad point. Usually what happens is when unemployment goes up, the Fed can reduce rates, cut them down to zero, which is what they mostly do. That stimulates the economy and that brings the unemployment down. But right now we are stuck in a situation where you have inflation increasing, so the rates can't be cut. So the rates have to increase when the economy is already at the brink of problems. So the situation became much worse than it should have, all right, because of an extended Iran situation. And now that's starting to reflect in price. So obviously, below the 50-week moving average, things can get tricky. And that also means that there's no quick way out. Now, maybe a miracle happens. Maybe we recover next week, have a bullish engulfing candle, and things go back to normal. But we play a game of probabilities. If miracles happen, great, we'll adjust to them. But right now, we'll have to deal with the situation that we have. Now, you guys might see that this is the first time I have hidden the watch list because this is not going to serve us much of a purpose today. It's more about the indices and what to expect going from here. That's what this weekly watch list is going to be about. So this is the overall situation, and I'm going to bring back the drawings and we'll discuss the levels as well. But let's discuss the red folder events for next week. We have Powell speaking on Monday, 1 hour after market open. I have no idea what that is about, but obviously it can be an important moment. The other important events of next week are obviously going to be the jobs report. I already mentioned how the unemployment is increasing. So if that comes out bad, it can also impact the market. And then obviously we have every single day news about Iran and coming from both sides. So those are your major events for next week. Now let's discuss levels. So I'm bringing back all the drawings. And the main thing, you guys might not realize the severity of this breakdown. So let me invert the chart. Let me remove these boxes that we had for intraday levels. And let's see what we have here. What you guys will see is we had this nice consolidation, all right, that spanned almost 6 months. All right, I'm going to remove this. And this consolidation had held all the way since November. I mean, we had that initial leg up, but we had the down move in November, and we hadn't really broken that until last week, right? Last week is the first time we closed below it. Now, you guys are obviously more used to seeing the price in an uptrend or going up, which is why I inverted the chart. But you guys already know this is kind of a bottoming box, especially once we break above the weekly 50 MA, right? So in this case, because the chart is inverted, this is a topping box. And once price breaks the 50 weekly moving average, usually we have a trend with the 9 MA. And after that, we might come back and retest the weekly 50 MA, but we all usually start building a box. All right, so that initial leg lower is probably going to occur now. Now, am I saying it that leg lower will happen right away? No, it doesn't have to happen right away. If you guys see the examples that we have from last year or the year before, we already know that the fear is high, the VIX is very high, things are already tricky. So we might get a bounce. Even last year, when we dipped all the way here, it wasn't that we went down right away. Once we closed below the 50-week moving average, we actually attempted a bounce. So on the daily charts, what did that look like last year? You guys can see once we broke below, right? So this was our consolidation of last year, similar to what we have this year. This was our first trend lower on the daily charts, and then we had a strong bounce in order to make a 50 MA box on the daily charts that led to the next leg lower. So what do we see now? We have just broken below this. We had our first move lower. We had a breakdown on Friday. We bounced for a lower high, and now we are in the second leg lower. So what will happen next week is we likely find some form of bottom. All right. I don't know exactly where that bottom is. Maybe price gaps down to 550 and then bounces. Maybe it comes all the way to 540, which I doubt right away. But at some point early next week, we'll find a quick bottom, and that's going to lead to a bounce. That bounce is probably going to get at least to the 21-day moving average, if not 50. You can see previous year's example, but I can also show you a lot more of such examples, right? The other example in 2021, you guys can see this was the initial dip. We had that move lower, and then we had a strong bounce. In this case, a massive bounce, which went to the 9-week moving average. Even right now, if we go to the 9-week moving average, we get all the way to 595. All right. On the daily chart, that will look like somewhere around the 21-day moving average, as I showed. So we likely do that. But what happens after a breakdown of such a consolidation? After a breakdown, this is a base box. We will have our first consolidation, which will be a 21 MA or 50 MA box, and then we will have another leg lower in the indices. All right, so that's what makes this situation so bad. We will have another leg lower in the indices, and after that, we'll probably try to make a weekly 50 MA box, or we recover. Who knows? But that's what that panic structure looks like. So just because there might be a bounce next week doesn't mean that we get swindled into believing that we're going to go all the way back up. I mean, maybe we get a bullish engulfing candle that closes above the 50-week moving average and the 9-week moving average, then sure, you can start to be bullish. But until that happens, if the bounce is only to the 21-day moving average or the 50-day, or if the bounce is only till the 9-week moving average, then you got to be careful. So just because we might get a bounce next week doesn't mean everything is clear. We have to be cautious because we have already closed below the 50-week. So that's the overall scenario. I hope you guys get the structure. On the daily charts, again, I can invert it. We have a base box broke down. Even if we have a bounce, we will probably make a consolidation and that have another leg lower. All right. So what does that look like on the weekly charts as the levels of importance? The levels of importance next week is the main one is around here. We have this 550 area to 556. That's a major support. What happens after that? Anybody's guess, but we have, let me go check on the daily charts what that support will look like because it's a bit of a mess. I'm going to move here. Something like this. So that's your next major support on the weekly charts. It's around 554 to 557. After that, things get very, very dicey. This might even be a bit lower because we have a gap up from there. Not sure why we had a gap up at that point, but this is your support from around 551 to 557. And after that, we likely go and retest this 540 area, which was the breakout in June. So those are your weekly levels. AKA next week, if we are in this area, this can act as a support from which we bounce. And then after that, we have this area. So what is the resistance above? Obviously, this 580 to 584, which is what we finally broke down this week. It's so tricky. Give me one sec, guys. I'm trying to do it live so I can have my thoughts clear, right? Because obviously the structure is not ideal. We can remove this base box on the daily charts or the stopping pattern. I guess you guys get the idea. So this is going to be our major resistance, 576 to 580, similar to what was support last week. Above that, we likely go to the 595 area. 593 to 595, that's the area we held for a month back in Feb. So these will be your weekly levels of importance. We have 551 to 557. Below this, likely go to 540. All right. And on the upside, above 580, we can start to look for a move to around 593 to 595. Again, until we get a weekly close above this, we are still in dangerous territory for that next leg lower. Just get that clear in your head. So that is the structure for QQQ. I've already discussed the context. I've already discussed the levels. Now, why might we get a squeeze? Well, obviously, we have discussed VIX before too. VIX has consolidated in a very high range for a while. Market is well hedged. All right. So to create a proper panic, they will need to find a way to deleverage this thing, which is why if we get a squeeze, once the protection is gone, right? Once people sell their puts, that's when a big dump can happen. So that's obviously I've discussed the trend structure in QQQ on why the squeeze might happen. That's also the leverage situation, reset the fear, and then create the problem. Now, some guys might say, or some people might say, Ayush, but why couldn't you have been bearish while we were in this consolidation? To that, I would say, guys, correction through time happens all the time. We have such consolidations. If you start being bearish in every single correction through time, you're going to miss out on a lot. You're going to be getting in and out of the markets quite a bit and missing out on a lot of gains. All right. So we have corrections through time. You guys can see 2023 was one example. 2024 early was one example. It's just part of an uptrend. Correction through time, correction through time. It's only when we break below the weekly 50 MA that this uptrend comes in jeopardy, and then